All right, first things, we got to talk Tesla. One of the reasons we have to talk Tesla on this is because almost every institution that attended the Tesla event has released their letter on what their takeaways are for Tesla. That is going to be quite interesting to break through. We're going to look at Barclays, Goldman Sachs, and what some of the other institutions are saying in their reports to their clients about the Tesla Investor Day event. Now, I love looking at what the institutions are saying because it's not clouded or shrouded in that sort of retail bull thesis. Generally, retail is extremely bullish on Tesla. It's probably the stock that is held by most retail investors, and it's one of the largest retail held stocks outside of index funds like, let's say, the S&P 500, which, boy, there are potentially some big risks coming to the S&P 500. But with that said, I really want to take a look at those institutional reports because the institutional mindset, in my opinion, is very, very important. Right now, we've got plenty of retail capital in Tesla, but when is that institutional capital actually going to flow back into Tesla? Is it going to be predicated on the market? Or would Investor Day have any kind of changing effect on what institutions believe for Tesla? We'll determine that in this video. Now, I'd like to also clarify because there are some folks who are making the argument that, oh, Kevin's being too short-term minded in terms of being frustrated about the Tesla Investor Day event. And I'd like to address that before we address what the institutions are saying. First, it's very important to know that the vast majority of people who are affected by Tesla stock are affected on a short-term basis. That means employees being hired, employees just hired, employees who are considering working for Tesla in either the manufacturing area, in the autonomous driving segment, in the AI segment, in the chips manufacturing or designing segment. Anyone who wants to work for Tesla or works for Tesla is immediately affected by a decline in the share price of Tesla stock. Therefore, it's really important for Tesla to do everything in their power to make sure short-term headwinds do not create too much of a downtrend for Tesla stock that then becomes self-fulfilling and shortable. Now, Elon Musk obviously and clearly violated this himself in 2022 with his $24 billion of stock sales that highly outpaced the $15 billion of retail net purchases. That's a problem and obviously led to Tesla's terrible drop to $100. Now, that may for long-term investors create a fantastic buy the dip opportunity, but what it can do is create a demoralizing environment for employees and individual investors who are affected by the short term. So, it is, in my opinion, very important that Tesla do whatever they can to organize their presentations in such a way that they're not actually misleading people. Now, don't get me wrong. We know in the world of YouTube's one of those places where the titles are often dramatic, and then we've got to actually get through the content. Well, in the case of Tesla, they did exactly what people dislike on YouTube in person. They provided an Investor Day title, but what they really did was provide sort of a margin update and an update on how we're going to scale and at the same time reduce costs in the long term with a lack of detail on time frames. Those were a slap in the face to investors in the short term because without time frames, without an organized presentation, without exact information on, hey, here's how all of this coordinates together, it's kind of on the world to sort of pick up the pieces and go, okay, like, that sounds good. Okay, how can we put this together? And how does this align with projections for timeframes, or when are these actually going to get incorporated into future factories and gigafactories? What are the expectations we should actually start pricing in, right? Without that, you're not actually creating an Investor Day presentation. You're doing more of a, hey, by the way, here's how we're looking at innovating in the future, but we've really got little insights in terms of timing or timeframes for investors. And that's why I think Elon Musk himself said, this isn't for investors like shareholders, this is actually for investors in Earth, right? For that sustainable master plan 3. Now, that's fantastic for a long-term investor. And don't get me wrong, I find myself to be one of the largest long-term focused investors on the platform. Now, some people make fun of me for that and they say, oh, really? You're the flip-flopper guy who sold stocks in 2022 and then rebought later. But the reality is, anyone who looks back at that decision and questions that decision is living under a rock. They are sticking their head in the sand like a dumb ostrich. and is a complete idiot for suggesting that I should not have sold in early 2022 in January. And that's exactly what I did. And I never bought a single stock while suggesting that I would sell, right? That I always thought I was going to hold my stocks. And it wasn't until I changed my opinion that I said, uh-oh, I'm not buying anymore. I've got a big change coming. And within 12 hours of me selling my stocks, the entire world knew about that. Some people like to try to suggest that, oh, somehow Kevin, didn't tell the world that he was selling and he was telling people to buy while he was selling. That never happened. It's a complete lie. And that's what I think is so fantastic about YouTube, because we can actually document all of that timing. And the beauty is that people who suggest I'm short-term focused miss exactly what I'm actually doing. That is, I'm so long-term focused, I run an active ETF that has almost a 30% allocation to Tesla. A substantial portion of my own personal portfolio is invested in Tesla. I don't care about the short-term fluctuations. I'm saying Tesla is making a mistake, and I'm frustrated on the people who are affected by the short term. Nobody could tell me that, oh, Kevin bought a jet because he's short-term focused. My jet, my plane that I personally signed for is a down payment on what I believe will be a $10 to $50 billion company in the future. The jet is me risking my entire net worth and my livelihood today, where I could retire and never work again today for an uncertain future 10 to 15 years from now. I can't think of anybody more long-term focused than that. That's what long-term focus is. So in response to anybody who thinks, oh, Kevin's a frustrated, short-term minded retail investor, you're a complete moron. Because if you actually look at the actions that I take and you see what I describe, I would be hard-pressed to find anybody more long-term focused than what I do. And yeah, I changed my mind. But that's because I changed my mind for what is going to create the best results in the future. And I think that's exactly what Tesla's actually doing here. Small micro flip-flops and adjustments now actually lead to exponentially better results in the future. Short-term minded individuals forget that. Small adjustments today expand to massive order of magnitude changes in the future. And I think that's what institutions are slowly starting to pick up on. And that's why we've got to look at exactly what the institutions are saying. And we'll go ahead and start with Morgan Stanley when it comes to Tesla. Take a look at this. So Morgan Stanley essentially in the short term maintains their price target of $220. Now, I personally think that's very interesting because Morgan Stanley suggests we seriously question how the competition can keep up with Tesla. Now, I completely agree with that, but I think it's very fascinating that what institutions are doing so far, and we've just started with institutions here, is they're making it clear that, okay, how is the competition going to keep up? But they're not actually making any kind of changes to their pricing targets. Now, that's likely because the outline that we got at Investor Day didn't really connect those dots yet for most investors. And it's going to be a while before anybody, I think, can really model the changes that Tesla is talking about beyond what's already modeled. Most of Wall Street is already modeling this idea that, okay, 7 to 10 million vehicles by 2030, Tesla thinks 20 million vehicles. We discount that somewhere between 50 to 60 to 70%. We get to 7 to 10 million vehicles by 2030. At a 50% cost reduction, fantastic. We already get a Model 2, right? We know that. Whether the Model 2 is a newer, smaller vehicle for the Chinese market, or whether it's just a newly created Model 3 branded as a Model 2 that's made with essentially 50% reduced cost. But so in other words, I do think it's very, very difficult because of the lack of sort of coordinated vision from Tesla's presentation for folks to realize that the small micro changes that are being made, the small adjustments. So for example, if we're on this trajectory for Tesla, or better yet, even make it sort of like if that's the trajectory for Tesla, right? I think it's very difficult for Wall Street to realize, oh, okay, Tesla just did that in terms of an adjustment, right? That was really what Investor Day was sort of that little adjustment, like that, by the way, is how we're revising going forward, right? And so, of course, in the short term, the market's like, okay, that's very difficult for us to understand. But the reality is, when you look in the long term, what happens is if you stay on the trajectory, this might be your growth. If you continue with the micro adjustments, your growth might be like this. And then this is actually where the bulk of the value is created. In the long term, it's when those small micro adjustments actually compound to being something extremely meaningful. It's, in my opinion, I see this very personally in my life. It's like starting my real estate startup, House Hack, starting an actively managed ETF, buying a jet that enables me to do social media, manage an ETF, conduct deep, high-level, and deep dive research, so both high-level and deep dive research, and start what could be, in my opinion, knock on wood, no guarantees, a $10 to $50 billion company in the future, right? House Hack. Like, those are the little micro adjustments that are happening right now. So I actually resonate a lot with Tesla and the changes that they're making for the long term. And so in case it's not abundantly clear, what we heard was fantastic from a long-term point of view. In the short term, the inflections seemed so minor. And because they were uncoordinated and because these long-term benefits were not properly explained, I think it was a slap in the face to investors and employees and potentially new employees in the short term. The vision of Tesla could have easily been coordinated without actually providing exact details. Nobody's saying, hey, you need to guarantee us, the Model 2 is coming out, January 1st, 2025. Nobody's suggesting that that is what Tesla needed to do, but coordinating the vision is what was missing from Investor Day. And that's why Investor Day really, in my opinion, was essentially clickbait. In the long term, fantastic. We could see the adjustments, but for investors in the short term, oopsies. But anyway, let's keep going here with what the institutions say. So Morgan Stanley suggests that Master Plan 3 entails immense levels of vertical integration. And this vertical integration will enable Tesla to iterate far faster and with less waste than other auto manufacturers. This is important. Minimizing that waste is critical, even to the point of, and institutions are picking up on this as well, moving from a 12 to 48 volt architecture burns less, or I should say wastes less energy, right? Because it can operate more efficiently with potentially smaller cabling, you potentially have less heat that escapes from the internal architecture of the vehicle, and these benefits compound over time. They might seem minor in the short term, but they compound over time. That is actually an idea that Lucid has been integrating into their vehicle for a very, very long time. The idea that we should operate these vehicles at higher voltages, so that way we could reduce amperages, basic electrical law. Anyway, we believe customers, or rather consumers, will one day look back at electric vehicles from 2023 the way we looked back at cell phones from the 1980s. Remember Gordon Gekko's phone when he was on the beach out east in the movie Wall Street? Tesla wants to be the largest manufacturer in the world by some margin. With that ambition, achieving cost leadership is deterministic. In other words, without achieving cost efficiency, you end up screwed. Well, that's obvious. And that's exactly what Tesla's doing for the long term. Again, they didn't pull that picture together for us, but that's okay. That's where I'm trying to also help pull the picture together. And I think that's what people in media do. That's why I actually think it's very important that we have the social media we have today. Not mainstream media. I think we're all frustrated with most of mainstream media. But I think that's why we come to social media, is to get the perspective that maybe isn't properly laid out by our government. Well, almost certainly not properly laid out. Or in this case, Tesla. We would expect to see most, if not all, of today's legacy auto company executive teams study the materials presented today and tour Giga Austin, as they have toured Tesla Fremont facilities in the past. Innovations brought to market by Tesla become the industry standard and are ultimately used by all automakers, not unlike how Henry Ford was moving the assembly line. Now, this is really interesting because you really have Morgan Stanley, again, maintaining their price target and keeping their view of Tesla in line. But at the same time, they're saying, oh my gosh, nobody is going to be able to compete with Tesla. So this is why we're making this video, right? To coordinate and sort of consolidate what is Wall Street taking away from this. It's also worth noting, by the way, that shipments from Giga Shanghai climbed to 74,402. That is 74,402 vehicles were delivered from Shanghai last month. That is up 13% from the prior month. It's down off some of the very high numbers we saw at the end of Q4 last year, but still finally returning to a larger trend as that main export facility for Teslas. Suppliers on watch. I actually think this is one of the reasons you saw MP Materials drop about 13% yesterday, was this talk about removing rare earth materials from Tesla's engines. Was an immediate slap in the face to MP Materials. And this is where it's in my opinion, quite ridiculous for people to say that the short-term stock movements or short-term occurrences don't matter to stocks. They absolutely do. I mean, look at this. You know what Tesla just did to MP Materials? It's not just that the stock fell 11, 10%, 10, 11%. It's not just that. You know what Tesla just did to MP Material? They sent a massive red flag to anyone working at MP Material solely focused on rare earth minerals that your days may be limited. Doubt has just been cast on the jobs of anyone working on rare earths in magnet motors, which are basically electric motors, right? Electromagnet, right? Electricity and magnetism are essentially the same force. It's kind of cool, actually. If you've ever taken apart a motor, you'd know that. It's pretty fascinating how similar they are. I mean, they're essentially the same force. It's awesome. I mean, that's how generators work, after all, right? Anywho, so going back to Morgan Stanley over here. Morgan Stanley says, Tesla is on a mission to further reduce part count, mass, weight, and complexity while bringing more components in-house. Smaller and less complex wire harnesses, fewer silicon carbide chips, and the elimination of rare earths in permanent magnet motors were a few examples provided during Investor Day. On the raw material side of the question, we still haven't seen too terribly much detail in terms of what Tesla exactly wants to do here. However, what we did see is 20 different executives across all operational disciplines. Now, Morgan Stanley says no teleprompters. In my opinion, that's actually incorrect. There were sort of preview screens in front of the presenters, and it was very obvious that at least one of the engineers was straight up reading from the computer screen in front of them. And look, that's fine. But let me just, from sort of a media point of view, say, you could take all of the information from these executives, but you need someone else there to consolidate or to simplify what they're saying. For example, this is how you could make the presentation so much easier. You have one person talking about, let's say, full self-driving, right? And they go into the weeds of full self-driving, this. And then you have somebody else, it could even be Musk himself, but anyone, somebody with a media mindset who comes out and says, now, those are the details. Here is the impact of what that means. What that means is we believe we are 5 years, at least 5 years, ahead of the competition. We believe that because it's taken X number of hours to train our neural nets and X number of miles driven. This is where the competition is. This is where we are. Now, we also think we're X% closer to achieving full self-driving for all vehicles without a driver even present, to where within the next X number of years, we think we can release a vehicle with no steering wheel. Now, no guarantees yet, but we are 95% of the way there, or whatever, right? I'm making up some of the numbers or leaving them as variables because that's for Tesla to do. But what they need is a translator, basically, and that's either going to be Tesla, or it's going to be potentially social media, right? But it's more difficult for it to be social media because we don't have all of the extra answers to create the impacts from that information. It's sort of like, here's the platter of information overload, and nobody's really tying it together in terms of, okay, how does this actually stack up now? How close are we now to FSD, right? We don't know because we didn't have somebody consolidate that information. That's my frustration with Tesla. Don't get me wrong, the information is fantastic. What happened is fantastic. But by skimping out on somebody who can consolidate the message, much the way that Apple does at an Apple presentation, well, you end up losing. And you hurt people and investors in the short term. That's why I think it's hilarious when people say, oh, Kevin's just a short-term minded investor. I don't even need to continue to defend that. It's so ludicrous. Nobody risks their entire net worth for a startup if they're not a long-term minded individual. Nobody throws everything and their reputation onto that startup or an actively managed ETF or publicly flip-flops and gets the world to hate them, even though they're doing what ultimately was the right thing. Nobody does that if they have a short-term minded outlook, right? If I had a short-term minded outlook, I'd care more about subscribers and pleasing everybody. When the reality is what I do is I provide my real opinion, whether that's on politics or stocks. I'm going to keep doing that. Anyway, let's see here. The non-avail of the Model 2. I mean, I didn't expect a Model 2 to get presented either. Neither did Barclays, neither did Morgan Stanley. There were a lot of people who did. There was the cannibalization argument that Barclays talked about, that they were not going to do this because it could potentially cannibalize sales in the future. That's fine. This is not that big of a deal. It would have been nice, though, to have sort of a wrap of, okay, got it. So Gen 3, 50% less cost. How about, like, at least some kind of guide? Like, are we looking at end of the decade? The beginning of the 2030s? Are we looking at, 2027? Like, how about, I mean, this could have, in my opinion, been as simple as this. You could have one single slideshow, a little, and this is going to be my estimate, by the way, right? So this is going to be my speculation here. But I think you could have had one slide that would have said something like this. Here's our roadmap. We think semi-truck full scale by 2025. Cybertruck full scale. Let's put that actually right here, and we'll call this by, let's say, 2024. Cybertruck first delivery, 2023. And then what you could say something like this is Mexico Giga 2024 complete, right? And then you go over here and you say Mexico Giga would be, let's say, ramping 2025. Mexico Giga potentially releases first, next gen vehicle Q4 2025. Mexico Giga ramps next gen vehicle 2026. First Optimus robots on a floor by, let's say, 2027, right? Like this kind of roadmap is something that would not have been very difficult for Tesla to give, in my opinion. Unfortunately, that wasn't given. And again, it doesn't have to be perfect. Like we could say, look, we can't guarantee this result, but at least some sort of vision of how does this all stack together? How does the Mexico Gigafactory fit into the plan? We heard it was announced, but we don't know how it fits into the plan. Now, we think we know. We think that batteries are going to get manufactured at Giga Texas and then potentially go to vehicles assembled in the Mexico Gigafactory at a lower cost, maybe with Optimus robots and at the same time cheaper Mexican labor. And when you combine that, you get the recipe for potentially a Model 2 with the parallel processing that we learned about rather than serial processing. That's, by the way, is a very important word. So if you're a Tesla investor, you really have to know this. So a parallel processing is basically taking the car and moving it from station to station to station, right? That's what cars do now. This is a series, in series processing. My mistake. That's in series processing. In parallel processing is you're taking different components of the vehicle and you're manufacturing you're essentially putting these together at the same time. So if this direction here represents time, then rather than the product moving through time, the product at the same time is manufactured in just separate parts. So the parts, right? Essentially, the idea here is that now you can have robots work on different parts of the vehicle at the same time. You assemble it like Legos, and you cut the time down substantially that's required for manufacturing these, right? Now, unfortunately, it doesn't seem like that Tesla Optimus robot is particularly close, especially since what individuals have posted online is a close-up of the robot hand here, and we do see that the Optimus, grabs something here. But what's quite odd is when you look at this closely, it actually looks like this hose here. It's a hose sleeve for what looks like maybe, I don't know, 14, 16 gauge wiring. You can see that gauged wiring right here. It's very small. I mean, this is like sort of the typical wiring that you might see for up to a 120 volt circuit or something like that, but could be even smaller. But anyway, it's covered by this hose right here, and it looks like this is some sort of actuator here or servo, so to speak. And the idea here is that the Tesla Optimus can already unplug this, and it's sort of a way of maybe unembarrassing the Optimus presentation. The last time we had sort of the Optimus event, where it was still impressive to see, okay, real world vision is coming to robots. We know, like, this is fantastic, but it wasn't the best presentation, right? And so this video is sort of an attempt to maybe fix that by showing us a robot that appears to be able to walk and position its hand where this rope is, or this hose is. The problem is this hose begins to move well before the Optimus actually makes contact with the hose, which actually implies that there's an individual off camera to the left over here who's actually pulling the hose out of the actuator for the robot. And this is really more clickbait here from Tesla. Ready for this? Watch very slowly. See, look at that. That cable pulls out before. See, look at right here, right here. There's no contact made by the hands yet, right? The hands are not really, I mean, we can't tell that this is actually being contacted yet. Yeah, look, right here. Okay, there we go. How does this actually start pulling back? We don't know. Now maybe we're just getting a bad angle here. But why does it look as though somebody else is potentially pulling it? Maybe not. Maybe that fingertip is a lot thicker than we think it is, or there's a larger piece of metal at sort of the inside of the hand here, inside of the finger, that is actually lifting this. But there's some rumor that this is actually a person who's pulled this plug out, because the plug actually seems to pull out well before the hand does anything. Look at that now on this side. So I've had your attention here. Now I want your attention to go to this plug over here. Pay attention to the plug. Watch the plug come out before, because I see your comments. Some of you saying, oh, it lifts it up. Okay, yeah, maybe the metal's thick right here, or maybe it's possible, right? But now I want you to tell me if this plug coming out is possible. So pay attention now to this plug. Okay, ready for this? Watch the plug come out before the hand moves to the left. And plug's coming right here. Plug comes out right here. Is it possible that the plug comes out because the finger puts so much pressure on the hose that the plug starts coming out? Yes, it's possible. But it looks like the plug is just floating out of there before the hand actually really pulls. Right? And the other thing, now part 3, is watch this motion where the hose gets yoinked almost before the hand pulls back. Okay, look at this. In this frame that you're about to see, yoink. It's almost as if it's happening before the hand is actually appropriately moving back. Now, we're not sure. Maybe it is possible. It is possible that there's a lot of tension on this piece right here. And if there's a lot of tension on this piece and on the hose, maybe it comes flinging out when there's enough pressure put on this by the fingers to pull it out of the socket. Maybe. But then again, we do know that there has been a reputation of Tesla to kind of show things that aren't really working yet, just for the excitement factor. Now in the future it will work, so it's fine. It's not a big deal. But again, what would have been nice would have been a little bit more vision around the idea of, hey, look, this is where we've gotten to now with the Optimus. We think the Optimus is going to be on the floor of a factory doing stuff like this, or at least in beta, as soon as 2024, right? Like, you don't need to give us guarantees. You don't have to give us absolute exacts, but put the puzzle together for people. That's what's missing, and that's because Tesla's not investing in a media person or a media department really here, right? It's sort of just like, here, we'll put it all on the plate and we'll sort of let social media or the mainstream media run rampant. Anyway, let's keep going here with some of the investor information. So we did learn that the powertrain might go down to about $1,000 cost per vehicle. Electric architecture, this is where they talk about a 16x reduction in lost power by moving potentially from a 12-volt architecture to 48-volt architecture. It's important to know that when they say here reducing current factor by 4x, that does not actually mean really anything. The only thing that matters is the potential lack of waste. Because if you increase the voltage, you will increase the, if you increase the voltage, you will decrease the amperage, but the wattage is the same. The power used is the same. The only thing you save is potentially having a more efficient wiring system that releases less heat. So potentially that's where you save the energy. But from a formulaic point of view, just because you increase the voltage does not make the system more efficient. It's just in potentially the fact that there's less heat. That's important. Think about actually why Europe uses the 240 volt architecture. It's not like when you go plug in a microwave in Europe, it's using more power than American microwaves. It's using the same wattage. A 1,000-watt microwave over there is the same as a 1,000-watt microwave over here. That's important to remember. The difference, though, is if you have more efficient wiring, you could potentially use thinner wires because they don't need to be as overheat rated, and that's how you could potentially make building and construction more efficient by having the entire property constructed out of a 240-volt wiring system. It also means you have 240-volt plugs everywhere. So if you want to plug in a washing machine or an electric dryer or a stove, you don't have to run a different set of cabling for that like you do here in America. Now, it's not to be confused with people who take an American hairdryer that's designed for a 120-volt system and plug it into a 240-volt system with a converter in Europe. Yeah, that thing's going to glow and look like it's using a whole lot more power. That's because it's drawing twice as much power as it's designed for. Okay? But again, the efficiency here is really not in the formulaic change. It's potentially in that the wiring would lead to a reduction in sort of wasted energy. Okay, that's fine. Again, Lucid's been doing that. Robot was able to perform menial tasks as originally intended. That's fine. We saw that and we just commented on this. I did like the estimate that there would be potentially more than one humanoid for every human at the factory. I did think that was actually fantastic, and I really enjoyed that that sort of forecast. So I'm going to go through just some more of the main parts of Wall Street here. Megapack can connect to any grid globally. It's the most energy-dense solution on the market at upwards of 300 megawatts per acre, megawatt hours. Megapack is 2x more energy dense than a traditional power plant. Fantastic. Should Tesla be able to hit the cost targets outlaid today? When coupled with OpEx discipline, we find it hard to see a way in which legacy automakers can compete with Tesla in terms of EV profitability. That right here is a fantastic line. Morgan Stanley is saying we find it hard to find a way for legacies to compete with Tesla. We already know that. Ford is not expected to be profitable until 2026, and they're already miserably failing. GM is probably also not profitable. And we're not even talking about profitable. We're talking about wildly unprofitable, right? It's kind of like Rivian when we looked at the Rivian numbers. They are spending, on a net basis, $300,000 to make an $82,000 car as of their Q4 earnings. On a gross basis, they are spending $200,000 per vehicle to make an $82,000 car. It's incredible. Okay, but anyway, so they are maintaining their price target of $220 for 2023. Pretty low. No changes here on price target from Morgan Stanley. We've got Bank of America suggesting that the presentation was a little light on details. They're also maintaining their $225 target. It's worth noting that, again, when they talk about being light on details, they're really talking about combining the vision. Where, like, the dates that I talked about, I think are actually realistic, the dates that I gave. But Tesla should be the one putting that vision out. So that way we know what are they working towards. I can guess all day long, but what are they working towards? It's kind of like when Elon Musk poo-pooed the idea of the copy and paste. That's fine. But that's the first time we've seen him poo-poo that idea. Okay, fine, don't copy and paste. Make every gigafactory different. Fine. then maybe that aligns with the idea that maybe the Mexico Gigafactory is for the Model 2. Maybe there's another Gigafactory that's for the Optimus robot, right? And that the Gigafactories are just basically tuned to different purposes. Maybe that's why Elon Musk seemed to kind of shake his head at that idea. That's fine. But again, a media person could combine all those details. That's why it's a middle finger for short-term purposes. Long-term, I mean, I would venture to say there's nobody more bullish on YouTube, at least, than me. So Sandy Munro, now what's interesting is he's extremely bullish, but at least when I had my last interview with him, and I'm going to talk to him this April about that, likely when we meet together, is he was pro not investing in Tesla stock during the time of my interview, which maybe ended up being a good thing. I don't think that anyone could have predicted that Elon Musk was going to dump as much as he did for Twitter, but it'll be interesting to sort of get his updated perspective on that. So Sandy Munro said something very interesting, though. He says, and this is why I want to ask him. He says he's putting his money, not booting his money. He says, I'm putting my money on Tesla's Model 2, the $25,000 vehicle, basically being like the Model T and the Beetle. Not an expensive luxury car, but a mass-produced style of car that everybody can afford. That was the idea of the Model T. That was the idea of the Volkswagen Beetle, that everybody could afford it. And Sandy thinks that's likely to be essentially the Model 2. And we're not clear if that'll be a smaller vehicle. But anyway, the Bank of America maintaining their 225. Let's jump into Barclays. Do we have Barclays? Let's go to Goldman Sachs first. So here's Goldman Sachs. The bottom line is we believe the event should increase investor confidence in Tesla's ability to reduce costs by 50% with its next-gen platform. However, we believe many investors were hoping for more specifics on when a third-gen vehicle could begin shipping, and therefore the lack of clarity beyond the comment that they're working as fast as they can could be viewed as a disappointment to some. I agree. That's exactly the problem. Again, the content, fantastic. The summary, bad. Now, unfortunately, their 12-month price target here is $200, so they actually see more near-term downside. Now, I think that's kind of remarkable because they actually think, and this blows my mind, they actually think that Tesla is going to grow EPS negatively in 2023, this year. They think Tesla's EPS will be negative in 2023. Okay, all right, whatever. And then go back to maybe 50 to 20% growth in the next few years. So, somebody here, Nightquill, says, I don't think they want to put out a date because it's never met and it hurts investors. I disagree with that highly. I actually think it's very important to put out a date because it actually creates the pressure to achieve close to that date, right? If you come out and say, let me put it this way, okay? Think about it this way. Everybody does this. Everybody on a human level can do this. Oh, I'm going to start working out and I'm going to get buff or whatever, or I'm going to exercise more. And we tell ourselves that. Yet when do we actually do it? We generally don't, right? Most of us don't. And it's just the way it is. Or we go once in a while. Oh, we're going to eat better, right? Well, if we actually set a goal, I will have lost X weight by X date. Well, now you measure your performance towards that date. And even if you miss it, you're more likely to have performed substantially better leading up to that date than if you didn't actually set a goal date. Setting a goal date and communicating a goal date now actually unifies Tesla's staff at, all right, might be ambitious, but let's try to make it happen. When you just do, we're doing our best, you take the pressure off. You should never take the pressure off. It's like my goals with House Hack. My goal with House Hack is to, and again, no guarantees, is to IPO an extremely profitable company that could be, in my opinion, worth billions of dollars in the future before the end of the decade. Before. I don't want to get into the 2030s without it having IPO. Now, I don't know what's going to happen. Who knows? Maybe there'll be a market crash in 2029 and it's not going to make sense. I have no idea what's going to happen, right? But I'm setting goals. And so I think it's important to set goals and then hold yourself accountable to those. If you miss, that's okay. Then just provide a new update. What changed? How are we doing in an adjusted time frame? I think setting time frames is actually extremely important. And this idea that, oh, well, they always miss their time frames, so let's just stop doing time frames. is a ludicrous example or a ludicrous suggestion for goal setting. I mean, that basically says, don't set goals because you miss all your goals anyway. You know, don't try to strive and achieve something because you're gonna fail anyway. That's a defeatist point of view. That's the worst way to look at it. Timeframes are very, very, very important. Goal setting, very, 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 very important. You know, Sen McGuire here says Tesla and time frames and says clown, clown, clown. That's fine. You can argue all you want that Tesla clowns with its time frames, but setting timeframes and goals is extremely important. Anyway, Goldman Sachs gives a little bit of a summary of some of the things that we saw, you know, where we're going to see reductions in fossil fuel use, the big one getting the grid to renewables, the next big one, EVs. I actually thought it was very interesting that moving planes and boats to EV would actually only lead to about a 5% reduction in fossil fuels, showing you that most of the reduction of fossil fuels comes from moving the grid to renewables and then moving EVs to renewables. I thought that was really interesting because, I would love to use less jet fuel. First of all, it's expensive, and you know, from the point of view of efficiency, I mean, it's fast, but it burns a lot of fuel. You know how much fuel a Boeing 747 burns? So when people ask, hey, how many miles to the gallon does a Boeing 747 get? You actually have to flip it around. It's actually about, I believe when I last looked, I have to get fact check. It's 2 to 5, but I'm going to go with 5 because I think that's what it is. It's about 5 gallons per mile for a Boeing 747 to fly around. That's crazy. 5 gallons per mile for a Boeing 747 to fly around, right? Very, very. So I initially thought wow, okay. I thought freight and planes would actually be a great place for efficiency, but probably because there are so many more cars and so many more grids, that's actually not the way to look at it. Now, fortunately, I'm not trying to pat myself on the back, but I purposefully wanted to get a smaller plane to be as efficient as possible. I could have spent more money and had a plane that's larger, sit more people, but I don't need more people in it. My fuel burn on my plane is about 165 gallons per hour. And that works out to roughly about 3.5 miles per gallon. So not great. It's pretty low. But then again, you're going 565 miles per hour, roughly at max speed. There's some takeoff considerations there, and it changes some of the averages a little bit. But a larger plane that we were also considering last year especially would have gotten about 1 mile per gallon. Would have gotten about 1 mile per gallon. So we're like, yeah, let's try to be, we get it. Let's try to be as efficient as possible. But anyway, I just mentioned that because I think it's interesting. I don't think people generally think about how many miles per gallon planes actually get. And then at the same time, I thought it was very interesting how moving planes and boats to sustainability, full sustainability, would only lead to a 5% reduction in fossil fuels. I thought that was interesting. I get it. On a per vehicle basis, it's not as great. But from an overall energy sustainability standard, it's probably the last place to get innovated because it has the least impact. I thought that was interesting. Anyway, here we talk about balancing the serial line approach versus the parallel approach, how that could potentially lead to 44% better operator density and 30% better space-time efficiency. Some other efficiencies here. We didn't really get any kind of autonomy targets. Talked a little bit about charging and wanting to build more. Talked about software, mega packs. We talked about implications. Here we go. Goldman Sachs. Bottom line is we believe this event should increase investor confidence in Tesla's ability to reduce costs by 50% with its next-gen platform, given the breadth and depth of Tesla's team and how its vertically integrated model allows it to optimize on both cost and performance. However, we believe many investors were hoping for more specifics on when a third-generation vehicle could be shipping, and therefore the lack of clarity beyond the comment that they're working as fast as they could be in the next couple of years is likely to be viewed as a disappointment by some. We believe a couple of years would imply the 2025 timeframe, and we continue to believe later in 2025 would be more probable. I actually agree with about a 2026 for a Model 2 timeframe. I think that's very interesting. So let's see. Somebody here writes MPG is for older people. Okay. Looking back, can you explain why selling in January 22 was the right thing when you had to pay taxes and gains since buying back has a blah, blah, blah. Okay. So first of all, absolutely the best decision I could have made because I allocated my portfolio from a large exposure to money-losing companies to highly pricing power centric companies that, in my opinion, have such high free cash flow that even in a recession, we are going to be able to avoid real valuation compression. Now, things will be volatile, but I would have lost way more money had I not sold in January of 2022 and told everybody about that transparently. I mean, twice as much. It would have been extremely painful. Now, again, I'm not saying I was perfect, but I did my best to get away from money-losing companies, and that was absolutely the right decision. Now, when you talk about taxes, and I made this clear, for me, my tax situation is different than other people. I had the opportunity to buy a plane for $13 million, which eradicated all of my capital gains from selling real estate, income, and stocks. Thank you, tax system. And specifically Donald Trump, who in 2017, through the Tax Cut and Jobs Act, expanded the accelerated depreciation to 100% for planes. Yeah. So anyway, okay. Then we've got one more over here. So we've got Barclays. It's a fair question. Let's see here. 2022 saved you from losing so much money on those small companies. Yeah, small companies got wrecked. I mean, there's some companies that went down, 90, 95%. And these are companies that I warned, hey, like, you don't want to hold these suckers in a recession. Now, some people get mad at me. They're like, you said that was a good stock. I'm like, yeah, unless we go into a recessionary environment. That was pretty clear about that. But that's okay. People want to have somebody to blame, and that's fine. So Tesla Investor Day, Master Plan 3, leveraging Tesla DNA to achieve mass scale. So I don't want to read every part of the Barclays one here, so we're just going to go to some of the highlights. Tesla looking at a balance of parallel and serial production. We talked about that. I thought this was interesting. They talk about demonstrating bench strength by showing all of these 13 additional people who generally don't show up on earnings calls. So I thought that was very interesting. And we expect the Mexico plant to use battery cells produced in Austin to make sure they achieve full tax credits from the Inflation Reduction Act. Now, this was also interesting. They talk about potential upside on deliveries. They talk about the idea that Tesla actually produced 277,000 approximately units through Q1 2023 so far. And that's about 2/3 of their Q1 estimate of 423 vehicles. And that suggests a modest ahead of estimate scale, although we are kind of like 2/3 through the season. But anyway, they say that's because of the production impacts from the Chinese New Year and the slowdown in January could actually mean they'll end up beating production estimates for Q1. Good to know. That's a little bullish on Q1 earnings right there. Limited color provided on financials was disappointing for some. Optimistic tone about raw materials. Yeah, and I think that's really a big argument there is that Tesla's not terribly worried about the future of availability of lithium and otherwise. Thinks they'll end up being just fine essentially on the commodities factor. So I think that's quite fascinating and quite useful. So I think that gives us sort of a deep dive, clarification, and summary from not only institutions, but also from me on Tesla. I could not be more bullish on Tesla. I've shown my price targets for Tesla plenty of times. I'm looking at well over $500, in that $500 to $600 range. You could say $525 to keep it simple. For 2025, I think it's a phenomenal investment. Going forward, obviously that's not personalized financial advice. I am a licensed financial advisor. I run an actively managed ETF. I have a real estate startup. I do a lot of crazy things that look crazy now, but I think we're going to be awesome in the long term. But I'm a big fan, so I want to make that as clear as possible.